now is time for a panel discussion. I also would like, Waleed, for you, if you could, Waleed Al-Badr, to join again at the podium. I also like to introduce to you Mr. Salim Al-Sibani, the CEO of Oman Oil Company Exploration and Production, and the man dancing with the wolves, Mr. Toby Hunt, as a moderator, Senior Vice President of Hill International, construction claim and consulting group based out of London. Toby, it's your show.
Thank you very much for the introduction. I'm not that good at dancing, but hopefully in the next 25 minutes or so, we should be able to cover some of the issues that certainly I pulled out of those two excellent presentations. Before I do that, I don't know, Salim, whether you just want to give a couple of minutes just to explain what partnerships you have in Oman. You didn't get a chance to speak, just to cover very briefly what you do in country so that we can have an overview of all three.
Good afternoon, everyone, and like to give you a couple of minutes about Oman and what we have in Oman. The oil and gas industry is quite very mature in Oman, where we have seen the early 60s, the early discovery in Block 6, which is what's known PDO, Petroleum Development Oman. And we have come a long way from that period to now we have a bit of what I call a combination of conventional, non-conventional, and we are quite heavy in EOR, heavy oil production. It constitutes around almost now 40% of our production, 960,000 barrels of oil per day, is primarily 40% of unconventional EOR. We have quite a diverse of geological structures spanning from what I call deep, 6,000 meters deep, tight gas, and lots of small accumulations in what I call small fields clusters. I work for a company called Oman Oil Exploration and Production. It's a subsidiary of Oman Oil Group. The main reason of its establishment is actually to tackle the niche area which is unexplored by the joint ventures, international oil companies, and particularly in the area of unconventional small fields. Oman has quite a diverse of international oil companies spanning from Shell in Block 6. OOCEP is the second oil producer, has a number of blocks. You have recently BP signed in tight gas project, the Khazan field. Is almost a $12 billion development program. Total recently signed also an offshore development, which is quite a new scheme for Oman to expand its oil and gas spectrum beyond onshore. And we have seen quite a success also from another small independent company called Masira Offshore, a consortium between Swedish and Indonesian and Malaysian firms taking the high risk into the eastern part of offshore of Oman and having quite a good discovery with light oil.
Okay. What I'd like to do is to tease out some of the pressure points. This is really to talk about what is the future looking like for the guys in the Middle East and North Africa, national oil companies, and more specifically the relations you have with their partners. Now, I got from the presentations that Kuwait is looking definitely towards Asia, Indonesia, India for your potential future. Tunisia, you're still looking quite heavily in Europe for some of your partners. Perhaps I can start with you, Waleed. How do you see the pressures with dealing with people from the Asian culture and from the people there? You obviously had some difficulties with China, but you talked about Vietnam progressing. What are the pressure points you're realizing with trying to set up these joint ventures in these other locations?
Yeah, actually, as I explained in my presentation, we found Chinese culture and dealing is very different than the others. We haven't found that difficulties when we went into JV with Petro Vietnam, but the Chinese market is very different. We have been told that you have to be patient and it may take years, and this is what we are experiencing right now. Each area, it has its own difficulties and its own challenges. But we are moving forward. We will not stop in the first hurdle. We will continue. We have a successful model with Vietnam. We are looking forward to have an opportunities in India. It's looking promising. And Indonesia is not progressing just now. China on hold.
And Jalel, are you finding, from your own perspective, challenges with dealing with any of the European companies similar, or do you find it very easy to set up a working relationship initially?
For us, there is a lot of diversified, companies working in Tunisia as international company. We have Anadarko from America. We have British Gas from UK. We have many OMV in Europe. We have ENI. But there is two parts. There is the investment. The taking risk is always for international company for the block available in Tunisia. We have the other part is we are operating two blocks. One of them is located onshore and has very high gas potential in deep levels. Something like more than 4,000. But in the other side, in terms of we are trying to follow the NOC relationship, and this was really productive, especially with the what we call NUMID, which is Sonatrach, and ETAP. And we with the offshore drilling that we have done 2 years ago, we made a discovery with a very good discovery of oil. And we right now are making assessment of the ENG studies, and we'll be looking for the appraisal. This is the kind of relationship, because what do happen is Tunisia, Algeria, and Libya are just neighbors, and we have certain the energy connections in between in terms of electricity needs, in addition to gas needs for Tunisia, because we have probably something like 4% of energy, gas energy that we are using for power generation brought from Algeria, and also integrating most of the work in exploration productions through this multilateral relationship. This will be easier for us, but we are really open for with all national oil company, as well as with CNPC, that they are also investing in Tunisia, ENI, and the others partner and national oil company. Tunisia is open for any relationship, and also open to get the investors to come over and enter exploration and production site.
Okay, thank you. And Salim, rather than ask you the same question, because I know you also work with a number of the international oil companies, are you finding that their appetite for coming to the region is declining at all with the various issues that are being raised in the Middle East and North Africa with the various frictions, or are they still very interested in entering into agreements and trying to get into joint ventures for E&P activities?
I think that question has quite a broad answers. And if I look at the MENA, even though we speak one language and we have almost one religion, but it's in terms of country needs, it's quite specific country by country. You have quite a number of models, and security out of all is quite critical. We have seen the impact of instability of certain countries that actually the investment in the upstream and all the oil and gas is at hold, and which is quite sad. But if I go back very specific to Oman situation, we have seen continuous sort of development irrespective of the oil markets. And this is quite a strategy has been adopted by the government and through the Ministry of Oil and Gas, that to continuously build a sustainable development in a way that mixing the small with the big fields, mixing light with the heavy oil, and mixing the conventional gas with tight gas throughout the period. And part of this situation is actually careful selection of the international oil companies, the joint ventures. As you know, most of you know that Oman does not really have one unique national oil company. It's built around joint ventures, and these joint ventures is quietly sort of specific selection. In one of these elements is actually operatorship know-how for the type of the fields and for the type of relationships. These PSAs or the joint venture agreements are actually honored with 20-year minimum program. And because of that stability and because of that kind of long-term partnership, what I call, has enabled Oman to still attract, despite having a technical risk. Oman has one of the highest technical risks. We have seen a lot of dry wells than successful wells. But yet we have seen quite a good inflow of international oil companies coming in, particularly seeing that this kind of partnership and sharing the risks between the government and international companies has paid off. Oman Oil EMP, as I'm party to that company, has been incubated also apart from niche operatorship, is also to partner with international oil companies and take some of the risks from international oil companies as well, and provide a cushion that the government also works with international oil companies into taking that risk.
Okay. From my perspective, what I see in my line of work is traditionally the balance of power between IOCs and NOCs shifting. So legacy PSAs that have been set up 15, 20 years ago, coming up for renegotiation, whatever it might be, is that actually the national oil companies have got a lot more strength in the relationship than they might have done a longer period ago. How do you see that playing out in the future as these PSAs come to the end of their term and you're looking to renegotiate, particularly those that have been going since the 1970s, 80s? Are you seeing the renegotiation of these relationships becoming one in which you're taking more of the lead now across what we start with you in Tunisia, for example?
For us in Tunisia, we provide the freedom to the operators, to the IOCs to make the choice in between the production sharing contract, whether the joint venture type of contract. This is obvious. We don't want to, but from our side, we feel that both could fit very well with our portfolio and needs. The only thing is for unconventional. The primary overview did show that investing, something 10, 15 billion dollars for a period 30, 40 years for unconventional doesn't make a lot of sense for a national company that's are working on the unconventional. We've been working for the last 40 years on conventional. We know the amount of investment if you are going to join any new discovery with the IOC or IOC investing in Tunisia. So far, it looks like for unconventional, this type of contract for joint ventures could not fit with our strategy, and it's probably better. The decision has not been made so far because we don't have yet the final version of the unconventional framework. But it seems to be that the production sharing contract is more favorable with the NOCs as well, with the government hosting the kind of unconventional activities.
Thank you. And Waleed, we were talking just before your presentation about the relationship you've set up with Dow Chemicals, I think, in terms of, how have you found the managing and the process of driving that relationship through? Has it been a relatively easy process for you to manage?
First of all, I have to explain that in Kuwait we are a bit different than Oman and Tunisia and maybe other countries. We are not open for JVs in the upstream or downstream. We are only open now for JVs with petrochemicals. And as you rightly put it, we have a JV with Dow Chemicals. We have 2 olefin plants Now we started, one of them started 1997, the second one started 2008. It is an excellent business model, excellent relation, and we are also looking forward for building our third olefin plant with a JV. Not necessarily Dow, but we are open for other partners.
And what about yourself, Salim? Are you finding similar to the other two in terms of when you're looking to renegotiate, is the balance of you finding yourselves in a stronger negotiating position than maybe you would have been in the past? Or have, for example, the shale gas revolution in the US put some of the, put Oman, for example, on the back foot and looking for alternative areas to supply your product to?
Now, the Oman model basically focus on few JVs or few international oil companies. We have around maybe 9 active operating companies in Oman. And in that aspect, some of those blocks, which is what I mentioned in the past there 20 years, they got renewed. And it was so smooth, it's quite quietly because of one of the syndrome is that grass always look greener outside the fence. Sometimes you say, oh, I want to change the operator. It has its own precautions, and it has its own challenges. This is well understood. So in a sense of renewals, which typically always a sensitive matter, how to balance the trade between the economics balance between the national interest and international oil companies. What I have seen and observed personally is that actually few things got amended, particularly the new development on local content, national mission in terms of social responsibility and enhancing the local community companies, trying to develop them into professional service providers, and also the mitigation of cost escalation, particularly what we have seen many of the capital-intensive projects, the escalation of cost and time, where these sort of things were put sort of with some certain caveats, where international oil companies are much more prudent in the way they do business. And as such, there's not been much of a dilemma between the first-tier IOCs or operating companies, the upstream side of it. The challenge has been, and which is continues to be, is the second tier between the operating companies and service providers. And the service providers and all the contracting community has been not that good in terms of scope definitions for capital projects, defining what you need out of the scope, shifting the risk between the operating companies to contracting communities which are not equipped to manage that risk. And that eventually we have seen quite a lot of escalation in terms of cost, delays, decline in production because of these delays, which escalates by itself back to the national interest. So the dilemma has been always that second tier, not the first tier. And the international oil companies have hard times trying to balance their act, how to manage their subcontractors and maintaining good relationship with the host countries. And it's quite a challenge.
Yeah, and I think just to give you some insight for myself, that's certainly where a large part of our business comes from, that tension between the tier two, as you would call it. You know, the main contractors with the price overruns and the delays to the various upstream and downstream activities is a challenge, and that's where we can see a breakdown in relationship between NOCs and IOCs, sometimes different strategies, different short and long-term outlook. Just a final question, running out of time a little bit. Do you see any sort of potential game changers on the future? We talked a bit about shale gas, which is obviously big at the moment. Do you see any other major issues which is really going to affect your future relationships with partners, whether they be JVs or even the tier two things in the sort of the medium to longer term future? Perhaps we can start off with you, Jalel.
As I mentioned, you know, more or less we don't have any difference in between joint venture agreement and production sharing agreement, you know, so far. So, you know, the decision is always made by the the investors, unless there is but through all what we have been through, you know, we had no difference. The relationship in between our operators and ETAP, you know, we always made it in a very respectable with what has been agreed in the conventions. We handle this day-to-day relationship. We have certain number of meetings together. We are managing together, especially the for certain operations that may induce a little bit of problems, like you don't find the objective of what you are operating. But normally we manage this relationship in a very transparent manner. We having the authorities oblige ETAP as national company to respect the procedure, especially for bidding. You know, do not exclude any companies, even if they are not set up in the country. Taking the list of bidders, you know, we send our area manager to come and join the operators to evaluate the wording. These are processes that will be helping, you know, both ETAP and the operators. So far, you know, when you got by the end of each year, and you approve what you have spent, you know, you just for any discoveries, that for cost recovery of what you have spent during the exploration period, you just add the what we have spent as operator, and there is no internal procedures for auditing that we have a department within the finance auditing department that will take care. So far, the relationship is smooth, and the rule is clear for each party, and we don't see any of these problems, you know, based on our experience in the last 40 years, you know, there is probably something in between discoveries that's in between two blocks, and we are always encouraging, you know, the partners and you know, all parties, if there is two blocks owned by different operators, to come and go through unitizations, because our interest is not going through dispute. The most important for us is to satisfy the energy need of the country with this deficit, and to a win-win strategy, win-win relationship.
And Waleed, what about yourself? Do you see any game change that will allow joint ventures for your country in the sort of the E&P activities going forward? I know it would be quite a long process, but do you see that happening at any point in the future?
I think the most new investors are looking towards getting, you know, certain production sharing contract. But normally, what has been done so far with the joint venture contract, we got certain review of agreement in case certain part of the terms are not very clear. We could do it. We could talk, but it's an open mind, you know, manner to do such things, you know, in good cooperation.
Okay, and Waleed, sorry, just do you see that? As I said, that game changer for you. Will you allow joint ventures, you think, at some point in the future?
Our constitution in Kuwait doesn't allow joint venture for the upstream, and it is clear. So the only thing we can get close to a joint venture is by TSA, and this is what we are doing right now, what we have been doing for the past few years. And no, I don't see any JV in the upstream.
Okay. And final question to you then, Salim. We mentioned about the potential of cost overruns, and Waleed was just, Jalel was just mentioning about auditing. What is your approach to how you manage that process as a country? Do you have your technical audit functions in place, and how do you monitor that ongoing tension between cost overrun and, you know, understanding you've got to get this project to first oil or to first gas, whatever it might be? How do you manage that internally within Oman?
I think we have, in terms of regulating bodies, Minister of Oil and Gas is the custodian of all the concessions and regulates all the operating companies. Under that regulatorship, They have a technical and financial expertise within the ministry itself. And when it comes to auditing, you have two streams. One stream is under the operating companies themselves, internal auditing process, and you have an external audit department, which is a government institution, which audits on annual basis all government sort of ventures, where the government has a stakeholding. And in cost recovery, this is a typical production sharing agreement. Cost recovery goes through that process, and the internal, external auditing is covered by the operating companies and is covered by the government through its own external audit, which is independent from the Minister of Oil and Gas. And if I may add, I think what I hear today and even yesterday, I think the oil and gas by itself is going through a difficult challenge, particularly in countries, in host countries where it is the primary source of revenue for the country. And unfortunately, you need to have a balance. The oil and gas is not a solution for everything, and particularly employment, services, tourism, or industries. The other sectors need to pick up their role in this, and the IOCs or NOCs are not in that process of going beyond the oil and gas, because our domain is oil and gas. And however, managing that expectation between what is inside our oil and gas is quite professional. I can see quite a lot of similarities, what I say, what I hear from all my colleagues. We're talking the same language. But going outside the oil and gas, that's quite a dilemma, and that needs to be worked out and managed properly, and maybe a lot of learning from the oil and gas into the non-oil and gas sector, trying to balance the tension and manage the expectation in the same time.
I think you're right. There's certainly the challenge between the amount of capital investment within that sector as compared to others is certainly something I think we probably all see the tensions every day. Well, I think we're lunching at 1 o'clock, so we're a couple of minutes over, so I apologize for that. But just a very warm felt thank you to all three of you for sitting on the panel, and to the two of you for having your fantastic presentations. Thanks very much.